It certainly is not an easy time to be bear in the stock market. The S&P 500 has not fallen by 1% or more since all the way back in October. What will it take for you to sell stocks? Welcome to Trading Nation. We're joined by Erin Gibbs of SP Global and Jonathan Krinsky of MKM Partners. Jonathan, is there anything that for you would say, okay, this happened, and really this time the stock market is going to decline, we mean it?
Well, you never really want to rely on one signal, Brian. But one of the things that has kind of kept us continually constructive since really the election is just looking at a simple trend measure such as the S&P's 20-day moving average. So it's the average price over the last 20 days. It continues to rise, but remarkably, the S&P hasn't closed below its 20-day moving average for consecutive days since the election. So if you had been long a couple days after the election, you're riding this trailing stop and you're up about 11%. So, if we get a close or two below the 20-day, it's around 2360 right now in the S&P 500. That would kind of be your first sign that, at least from a short-term perspective, maybe the momentum is slowing. It would take a lot more than that for us to get outright bearish or think that we're entering anything more than a correction here. But I think that's your first signal, and that's that's kept you in the market on the right side for the last 4 months. So we stick with that.
If you're a short seller, if you're a bear, it's been a very, very difficult time. Erin Gibbs, you think the good times are going to continue to roll?
This is, I would say, a really tough year to be bearish for quite a few reasons. One, the U.S. economy just keeps delivering the numbers we're expecting. There would have to be a major surprise happening on Wednesday for us to be concerned about any of Fed rates raising. And another thing is that earnings are still in the double-digit growth for 2017. We're expecting about 11% growth. We haven't seen double-digit growth since 2011. So this is a good year. We're finally seeing some profits come back, and it's just hard to be very bearish when we're consistently seeing profit growth this year.
So you think it's a lot has to do with earnings. It's not just a Trump bump.
Yeah, I think he did happen to come in on a very good year. Like I said, we haven't seen anything this close since 2011. So he did have the economy on the upswing for him.
Yeah, helped out. Listen, I know
Brian,
people. Go ahead, Jonathan, finish it off.
I was just going to, if I could just add that, you say we haven't had a 1% down day since October. We haven't seen a 2% drawdown, I think, in about the same amount of time. But that very low volatility is actually more consistent with very strong markets and bull markets as opposed to the sign of an impeding correction or bear market. So if we were to actually see volatility increase, that would be another sign that maybe the uptrend's coming to an end.
All right, yeah, there's been a lot. Look at that. The VIX at 11.3, simply incredible. These are interesting times we live in. Erin and Jonathan, thank you both very much. Appreciate that, folks. Thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.